Good morning, everybody. One of the earliest streams. It's 8:42. I've been up for 2 hours, but it's time to analyze. We're going to analyze for London session and just go through the market. So we're going to start with DXY just because it affects a lot of pairs. We didn't trade really last week. I think we entered maybe one trade, but nothing crazy. Okay, top date kilogram. In the meantime, we're going to try tape read DXY, carry that over into other pairs, and then see if we are bullish or bearish for this week. So we have, I think we can get rid of this. The price is far away from it. Get rid of all of this. I don't know what that's there for. So I don't like this. Is that? The heck is this? There we go. Over like this for real. Okay. So this is what I've gathered so far. So with DXY, if you're starting from this ultimate low right here on the start of the year in January 2026, we have been bullish, right? In terms of swing highs. Swing low over here, swing high over here, swing low over here, swing high over here. So that's a bullish structure. And I'll highlight that by showing you this. We are technically bullish, meaning that at some point if we were to continue this trend, we would then, in this short-term bearishness, we would then have a reversal from this short-term bearishness to align with the overall structure of it being bullish. That's us looking at the grand scheme of things from this time period. What you'll notice as well is that literally this whole section right here is consolidation, which happened from April 2025 to October. This is a year end, like a year and 6 months. So a year, 6 months of, well, a year and a bit of consolidation. And excuse me, but it is interesting because we were very bearish. If I was to zoom out a little bit, you can see here we were bearish. Now we're consolidating. What does that mean? When price is consolidating, it means a couple of things. It means that it is deciding where it wants to go. For example, here we're bullish, bearish, consolidated, bullish, bearish. So now we're consolidating again. Could even push further downwards within this overall scheme of things. Bearishness, consolidation, sweep, bearishness, consolidation, sweep, bearishness, consolidation. That could be a repeat. We could also have, price consolidating go up. So consolidation is kind of like a place of accumulation. It's a place of indecision, a place of price was about to do something, but it's not going to right now. So with that in mind, the idea I'm having is the overall long-term bias doesn't exist yet. So essentially what that means is that I believe we are to get our direction from smaller liquidity pools rather than focusing on the large scheme of things, because when you focus on the large scheme of things, it kind of lacks clarity. One of the things we was talking about earlier this week is that when you need a target, if you don't have a target, you don't know what you're doing. The reason why is because if you don't have a target, price can easily decide anything. So if you're holding a trade in hopes of something, like hopes of price going down even further, why would they go further? Always set a target and be happy with your target. Meaning that if it doesn't reach your target, it's fine. If it does reach your target, it's fine. Now, how do you determine where and make sure that you are consistently taking money out? In that instance, you have to have a rule set of partials. So you set low hanging fruit, medium hanging fruit, and high hanging fruit. All plausible, all realistic. And then, of course, that's a whole session on how to set a target. For example, you're not going to set a target to make 100 million tomorrow, are you? Because how is that plausible and logical? What do you have? Unless you have, let's say you have £1 billion, that's then somewhat plausible. You're going to have to risk a lot though, in terms of percentage wise, to make 100 million. You're going to have to be exposed. But if somebody has £10,000 in their bank account and they want to make 100 million tomorrow, well, your options are very limited. You're going to have to literally buy something, go all in into something that doesn't make sense, and pray is tomorrow that you get your money back. You then have to spend £10,000 and gamble it, which is very low odds. Buy lottery tickets, again very low odds. So your options for making 100 million are not good options, basically. Okay, so setting a target is important, that you are realistic in doing so. So I'm gonna stray away from talking. I'm gonna try focus a bit more on analysis because it is technically still on this session. So with the XY right here, like I said, we're not going to focus on the larger time frames because larger time frames seem to lack directional clarity. It's consolidating, So we go down to this 4 hour, or we can even start on the daily time frame. And here's what I do notice. So we have this high here and this low here. What is this? This is a range. You see this low was created at Monday. See if I can get the timings on it. This was created Monday, last that Monday, 15th of June open. So the open on the start of the June, second week. Was that second week? And then the high was created on this Wednesday here, London session. So technically Asia session low, London session high. Okay, so this is the range. Now, what's so important about this range? Well, the thing that's important about this range is that for me, this is structure. This is structure because it is present on multiple time frames, and it's a swing low and swing high in respectively. This low right here is a swing low, and this swing high is this high is a swing high. So it's a key area of structure. Okay, so that's important to note. Then we have the fact that if price was to close below, we're bearish, and this below this low right here. And if price was to close above this high right here, we're bullish continuation. Now here's the thing: we have something happening on the small time frame which can give us a clue. So you can see this swing low here was within this range. So we're not exactly bearish yet, but we have signs of bearishness. Signs of bearishness is different to being bearish. Signs of bearishness is things happening that can suggest that we might be bearish. Bearishness is a continuation of lower lows and lower highs. That's how you know something's bearish. A sign of that lower lows and lower highs is the formation of a first lower low or a second lower low, or it could be a sign of a break of market structure, having a market structure being broken on a specific time frame or a lower time frame than a larger time frame. That then confirms that you might be bearish. What I mean by that? Well, this swing low is on the daily time frame, but it's not a major swing low. The reason why it's not a major swing low is because it is between this range here, which is another section of swing lows and swing highs. And you can even argue this swing low over here is a better range from here to here. And if you were to close below here, you're more likely to be bearish. But then you can argue this is the utmost right here. This is the defining factor, right? Because there's nothing lower than this. So if we go lower than that, we're 100% bearishness, and we can continue even further. So us having bearish signs is not the same as being bearish overall. Because if we get on this time frame, we are consolidated because we're within a range from here to here. We're in this range still. So whilst you're within a range, you're consolidating, but that's why I say it's within a specific time frame, because technically we're bearish on a smaller time frame. Why? Because we've broken structure, we've had the fair value gap, we're just waiting for the retracement continuation. But do we get that continuation? That's what we need to decide. So how do we know if we're going to continue going lower and lower? Let's zoom in a little bit. Remember, we can't use the larger time frames because the larger time frames suggest consolidation. So we have this range of here and here. Now this is green, this is black. Why? This black is just showing that it's a high in general. This green shows that there's liquidity below it. Now what is the liquidity? What we see here on Sunday the 2nd of August around 7 p.m. price came close to the low, and then Friday the 7th of August 7 a.m. we came close. So we almost created equal lows right here. Now it's not exactly like precise, but it's pretty close. And the spread or the difference in height is shown by this box right here. So really and truly, you could argue this is equal low. So we have 3 touches. Retail sees that support. That's an area of liquidity that could be targeted. So DXY, I think, is very likely we take this out. We're right next to it. Oopsie, I just clicked the wrong thing, I think. We're right next to price. This is equal lows right here. And when you take liquidity this way, you tend to then move in the opposite direction. So I'm going to quickly look at news. And the thing I like about this idea is it fuels both my bullish and bearish idea. If I'm bearish, there's places how I would like to sell. If I'm bullish, there's things I would like to happen before I buy. So if I'm bullish, let's start with bullishness. I would like liquidity on the sell side to be taken out. Then I'd like a lower time frame market structure shift, retracement, and then a buy to my target. Right, that's what I would like to see. Taking out this lower right here, which is liquidity, breaking of this swing high right here, which is the structure, pull back into entry, and then target buy into our target, which is our actual trade. So that's what I like to see with buys, right? If I want sells, I would like for price, it doesn't matter if it takes out liquidity or not, I don't care. I would just like for it to come back down from this high to this low. The optimal trade entry is round about here. It can hit this fair value gap here. And then of course you can then target this afterwards, or even a deeper target. So what do you notice? They have something in sync, which is this move right here. So either which way, if I'm going to be entering buys, right? Let's say I enter a buy right here. Well, according to my sell option, I can sell once price gets up here. So one of my targets will be here, because this is where I expect to sell. And my overall target will be here, because it's liquidity, my high hanging fruit. Anything beyond here would be maybe here. Other than that, it's now starting to be hope and not skill. So this is the utmost area I will target because this is a institutional level and it's a swing high. Then this area now becomes some solid area of liquidity because there's 3 highs around this area. So this is like the medium kind of hanging fruit. Low hanging fruit is optimal trade entry against us. We're trading in alignment with this bullishness that we created from the beginning of the year. We have this bullish structure. So how do I know that this is the area? We look at it from multiple time frames. So we've looked at this now from a smaller time frame, is that we want to see a confirmation. That confirmation will be a break structure on a lower time frame. Because that, even though we've created a lower low compared to this swing low right here, and we've done so with displacement, it is not the swing low I would say is the ultimate swing low for confirmation of bearishness. And on top of that, we don't have a prior sweeping of buy side liquidity before this displacement. It's a failed higher high. And this failed higher high isn't the liquidity or the fuel that institutions will use to then displace. This could be a news event. This could be just retail, accumulation of retail. This could be a fake out manipulation from institution. So we have to be careful. If we had a liquidity sweep, for example, we took out this swing high and then we displaced, I would be more inclined to say this is bearish because we have a lot of factors contributing to it. So I'm very interested to see if price takes this out. Remember this bullish structure. If it was to buy, that's what we'll be buying in alignment with. Now, another thing we could do is look from this range to this range. And we can see that we are not in optimal trading entry. So if we are to look for buys right here, we would like for price to come down here first to then go back up. Because generally speaking, this optimal trade entry is the ratio of where price uses to continue upwards. For example, if we have this range from this range here, we came almost to optimal trade at 6.2, or we came to equilibrium at 0.5. If it was to use this swing low here though, we did come back down to optimal trade entry, which was this order block right here, which then pushed off from price. So if we was to translate it over here, what do you notice? It almost exactly matches this range. So we would like for price to come back down to this order block right here, this area, and then potentially use that to push up. So I do think we might even see this rather than the sell option. Now, obviously, we'll still take some take profit over here because if you were to do it like this, optimal trade entry is up here. The only thing is, if it comes all the way down here, though, this may now become optimal trade entry, this fair value gap right here. So that might be the low hanging fruit. But it depends how far we drop that down. But literally, all I did was from this low to this high, right? We created that move. And then I dragged it. I didn't even change the values. And you can see it pretty much almost exactly matches up. So I do like this idea of price continuing to the bullish side. I've been bullish on this for a while anyway, but this black candle was a spanner in the works. It was against my beliefs of what would happen. So I do think price will sweep the lows first before it then pushes to the upside. We have a quick glance at some news options. So today is Monday the 10th of August, and we don't have any news concerning USD until Wednesday, New York Open. If we also open, we still need to update this. I haven't updated this in a very long time. But we have the idea that Tuesday, London Open, we would have probably formed the high or the low of the week. So I expect for this specific day, for price to be making this move to the downside. So if that the DXY is bearish initially, then bullish, I'm expecting for EU, all of those types of pairs to be bullish to capitalize on this liquidity sweep. So that's my analysis of DXY. It's a little bit deeper, but I like to spend more time on the larger time frames or on these types of analysis than I do entry model, because my entry model is very robotic. It's very easy, simple rather, to follow. So I don't really need to spend much time going through pairs and looking for my entry model. That's not the key. I want to get context right. Once you get context right, it becomes so much easier because your entry model is automatic. And once you have that clear direction, you have a bit more conviction. If you don't have this conviction, you can see entry models for both sells and buys. And then how do you know which one you go for? Because your entry model is saying that both are correct. You filter it out by context. And if you start with context, it helps, because sometimes you may have a bias or an inclination when you start with entry model. But if you start with the context, you can never be swayed by your entry model because your context rules. And you spend a lot more time on it anyway. So now I'll be going into the pairs. We can start with the USD pairs, right? So we're going to start with G, or we're going to start with EU because I've traded it the most. And before I start looking for just blind buys, because that's only DXY, right? DXY doesn't always mean that it's going to be correct or in exact sync up with every single pair. It's against a pool of liquidity or pool of instruments. So you do have to still analyze the bias for each pair. So I'm going to start off with Euro USD on the weekly time frame. So we are, I wouldn't say consolidated, but we are narrow. Our range is quite small. We haven't really expanded in a specific direction in a while. We started from the beginning of the expanded. This is the beginning of last year even. We expanded up the whole of 2025, or the whole first half of 2025. Then we consolidated for the second half. And in the new year, we created some bearish signals. We took out some swing lows with some displacement to the downside. We traced all the way back up to almost the entry or the initial cause of the move. And then we displaced, creating a lower low again. So for this range, we were bearish, and we were capitalizing on these sells right here. So if we're to remove these draws real quick, you can see here that we're bearish, and we are currently pulling back even though we're bearish. Okay, so to bring this back, we also have a range from this high to this low. We are nowhere near the optimal trade entry. For us to drag this to the left, right, from this high to this low, you can see this optimal trade entry is where price ended up reversing from. So it is plausible that we could expect to see price come back up even further before we go back down. You can see here as well, this is a consolidating area. We haven't got expansion like this, so we shouldn't really be expecting these small pullbacks. We should be expecting deeper pullbacks. So this deep pullback is plausible. Okay, just a side note. We also see last week we consolidated, which is a week we did not take part in. I didn't like it because we had news this week, and this week was kind of like correction. So I didn't really want to get involved last week, so we didn't really trade that much last week. Albeit I did trade, and I let this was the option. It was a scalping idea, buying of price to Asia highs and London highs. And it was a small target, it was about 1 to 2. We ended up closing at break even. Price then tagged, I think, either entry, something like down here, and then went all the way back up. Not only did it hit our target, it went like 7x. This is a 2x. It went like 3 times the distance. I'm not mad at it. I closed at break even because of the bias of sells. It was in the order block. This red faint box is a 4-hour order block. So there was always that sign of bearishness. When do institutions step in? And using my liquidity as my entry as liquidity, my stop loss as liquidity. So that was my Telegram update. That was the only trade I took last week. It was a break-even trade. So I basically didn't trade last week. And I was also working away. I was away for 5 days. You can see in the videos I had made when I was talking to the camera. I was in a hotel for 5 days, helping with my church program. My pastor of my church, she had an event with women, and I was ministering or helping. I was a helper. I was invited to come. I was 50-50 in going, honestly, but certain things made me go. And I don't regret going at all. I never regret anything anyway, to be fair. I enjoyed myself, but it was work because I made it harder for myself than it needed to be. But it was good. And I'm grateful for the invitation. And I can't wait to express my Thanksgiving. Soon to come, though. Anyway, this is the weekly time frame. On the daily time frame here, it's a lot clearer. See how weekly is very scatty. What's the word? When something's like very messy. It's very messy. There's no clear direction because there's indecision on this time frame. But it's a lot cleaner on the daily time frame. The daily time frame is still a large time frame in the grand scheme of things, and you can still, even in this mess, create profit or create opportunities. So I don't see mess and just say, oh, I'm going to leave it alone. Sometimes it's okay to have mess because sometimes that mess looks clean from someone else's point of view. It's like having a messy room, but somebody knows where everything is in that messy room. It may be messy to you. You may not like it. You may not want to stay in that room, but somebody else can stay in that room because even though it's messy, they know exactly where everything is. It's like organized mess. So similarly, you can have that in a marketplace where one perspective looks messy, but you can still find clarity within that mess by having a system within it. So you look at it from a different perspective, you look at it from a different time point or a different time frame, and then the mess no longer is messy, it's now organized mess. So we don't disregard this time frame. That's why we still highlighted certain things, right? I'm also analyzing this slow on purpose because I'm trying to emphasize you spend more time on these types of time frames than you do the entry model. We're also using statistics to back us up. Excuse me. That we would most likely have created the low or the high of the week by Tuesday, London Open, which is Tuesday at 10 a.m. and which is tomorrow. So this day here will kind of decide in direction. So Mondays or Sunday, Monday, you kind of want to use to determine where you're going. There is also possibilities you get entry opportunities on Monday, but I think the best times to trade is Wednesday. Specifically, if I had one day I could trade a week, it would be the Wednesday. And if I had one, if it's Wednesday I'm trading, you want to start looking for the opportunities by Tuesday. Monday you want to prep. Thursday you want to start looking for either continuation ideas, reversal ideas, and then Friday you want to start like coming out of the markets. If you don't like holding over the weekend, which I personally don't. So basically Tuesday to Thursday, Tuesday, Wednesday, Thursday, are the most important days of the week for me. So if I'm going to do something and someone wants to take my time away, Monday, Friday is the best time. Okay, so on the daily time frame looks cleaner. Why? Because you can see here we are bearish. When you're bearish, you want to be in a bullish move, even though you're on a bearish bias. Being in a bullish move, you know that that bullish move isn't going to end. It's going to end. Isn't going to continue. It's going to get to a certain point and reverse. So your job is to find out where that place is, and then when you find that place, you can then posture yourself or position yourself for confirmation. So this red box right here is a daily fair value gap, which is also part of this bullish run here, which is a bullish order block on the larger time frame. Bearish order block, sorry. And so we've made it up to this area. And if we are to be bearish from here, we want to see price react to it. Now, normally, when you're in a fair value gap, once you close past halfway point, it's a way to... Okay, that's fine. You don't want price to fill it, or if you do fill it, you want it to have a strong reaction to it. Right here, we're chilling in a fair value gap, a daily one at that. That's not a good sign for sells, because if we're calm at an area of where we shouldn't be calm, and we're not getting that reaction, well, that bullishness might continue. So let me get rid of these lines. Okay, I'm gonna now look for overall moves. So this is the big move, right? We had this big bearishness, then we had bullishness. Bullishness reached OTE, which is this kind of bearish block here, and drop down. So if we was to scale it, we technically haven't created the same distance. That's number one. But if we follow the principle of OTE, we are yet to meet or reach OTE. And OTE, we have fair value ups here. We have this bullish kind of consolidation area here. And then if we look at it from the perspective of consolidation, Okay, I'm gonna leave consolidation outlook for now because it might get confusing. Black instead. This is daily order block. I mean, fair value gap. Order block is right here. Since we fill this fair value gap, we can get rid of this and this maroon, so we know that it's a. Okay, so this is the last bullish series of candles before the displacement. So this area here we're going to establish as an order block. We also have from this high to this low prices in OTE right now. We did tag into this daily order block. Okay. I like order blocks because it is areas where institutions get in, which essentially means that this is where they start to enter the trades, almost, basically. That's the way I see it. So remember, we are bullish in the short term because we need to take out that liquidity on the DXY. Now I kind of want to see how sessions are because we want to now start looking for areas of liquidity. So we're not just bullish for no reason. We're bullish up until we take out fuel to fuel our bearishness. So on the daily time frame, I see this daily high from last week, Friday, and that's about it really. We then also have this being in tandem with the New York high and also London high. So it's two highs in one. So I think we're going to be bullish up until this area, and then we're going to fuel our downward push because this is also within the daily order block. So essentially, we're bullish up until that point. And well, London session, this needs to change color. I don't even see it. It's the low. Okay. So yeah, Asia created this range here from this high or this high to this low. I pull back. Well, there's not really anything clean here anyway. Well, to this order block here would have been a nice place to buy. Asia actually took out this liquidity here. Anything those opportunities on the 1 minute, but things we're waiting for. So for bearish for this week, we want price to create the high by Tuesday London session, which I think the high will be over here. So if I'm going to be entering, in theory, it would be me entering up here. So if I really think price is going up, for example, we just take in Asia's high right here. And if price doesn't go below this low right here, and this becomes a range, swing low, this swing high, swing low, swing high, then I could potentially see, why does it stick? Oh, it's doubled up. Okay. So need for price to pull back into OTE. See there's some bearish candlesticks here. Like it to go up a little bit and then come down to OTE. Maybe we can have a scalp it and then let some run. So this is ultimate context. This is me trying to read prices goals before it happens. So when it comes to predicting the markets, you have to have an overall target. Now, I'm not saying this will work out or this is what's going to happen, but this is what I believe will happen. But we started on a weekly time frame. Weekly time frame, we created this buy opportunity from this. This looks like mess. How am I meant to know? Then we have the so we have the daily time frame. We have this order block which we want to come into. We got a reaction from it the first time, but we're heading towards it again. I think we want to go a bit deeper in so we can get more liquidity, more fuel. Order blocks is the places where institutions get involved. Order block doesn't mean it instantly drop. For example, here, this is an order block. Price came up to it one time. We had a big rejection. What happened next time? It went all the way back up, almost to the same high within this order block here, and then closed in it, opened again, traded up a bit, and then bam. So price spent 3 candlesticks, which is 3 days, within this order block. Here, we've spent 1. We're about to spend 2. So it could even be by the third candle we instantly drop. Or we might not even reach this green target here. But that is our bullishness lines up with our DXY analysis. And we believe price wants to take out this liquidity here before it pushes up if it wants to do that. And then we have to be adaptable rather, because price may not do that. And the good thing is that our entry model is actually a filter. If we don't see our entry model to the T, we don't get into the trade. The thing that helps us with is sometimes we get direction wrong. Like we could be wrong, right? We could be wrong about DXY being bearish and then bullish. It might just be ultimately bearish. It might consolidate even more. It might just straight go bullish. So we could be wrong about the sequence of things. We could also be wrong about the whole general target in general. So we have to be careful not to like spend too much or put too much emphasis on our context, despite context being important. Okay. So that is our analysis of EU. I think what will be best, send alert. I think if you're going for scalps, it's still important to read larger time frames so you can get context too. Because scalping towards context still is quite a good idea. You just can use kind of lower context ideas. Like you don't need to know the weekly, like you don't need to know necessarily the weekly context. I think there's more important things for trading the 1 minute, unless the 1 minute is your entry. Okay, so that's EU analyzed. So GU is a little bit ahead of schedule. Like it's gone further up in terms of it's taken out the Asia range. It's also closer. What's that green line from? Okay, that's liquids we've already taken in theory. But there's two. Okay. Well, I'd say here, right here is the ultimate liquidity target. So I think GU is pretty simple. Takes this. We're gonna wait for that displacement for our entry. Is it the USD? Okay, it's at OTE from the daily high range. We do have liquidity within this daily fair value gap. We have price consolidating in it, and we have New York and Asia highs. This is a strong area of liquidity right here. So we have these two areas where price could reach to then again go down. So that's our bias right now for USD. I'm looking to purchase or buy here. It's not exactly an order block because there's no displacement right after. So I do, when you have a bullish move, bearish candlesticks become support and resistance almost. So technically even price could bounce off of here and go up. Excuse me. But that's a bit, that's like the previous move. So I would rather it come all the way down here, which will be here. And then we could either set it, well, if we put it below here, like 3.5 pips. That's concluding spread. And my target would, well, first target would be a 1.31. And then ultimately, I'll be targeting this. So I could take out half at the previous high and then the rest of it here. And this is just me, like I don't actually have to enter this. This is just me scalping, which is me almost preparing for what the real move is, which is sells. So it's like I'm taking part in the manipulation. So that's my personal kind of bias. For the structure of today, I don't think I want to analyze anything else. I kind of like sticking with the pairs I'm good with, which is the ones I trade all the time. So I like sticking with these USD pairs. And so what I'm going to, I think, do is just watch these three for the day and then see if, well, if we don't get this entry, that's fine. We'll just wait for the overall move. And we have our data backing us up too. There's no news today, so there's not going to be much manipulation via news. So we're going to have a slow moving day. So we're going to have to be paying attention. And then, of course, we can, I probably, like, this is my first week back trading properly for like the past week or two. So I'm going to do some work outside of trading with an eye on the markets. And then Telegram will know if there's any updates. So I spend a little bit more time slowly dissecting the larger time frames because I did want to emphasize that and show you how you can use the larger time frames even for scalps, but also how important it is for entries as well. and, well, rather direction. That's literally the essence of our trading. That's where skill is involved. We're tape reading, we're analyzing, etc., all on the largest time frame. If that's where the institutions are using, the time frames they're using, it's the time frame we need to spend the most time as well. So yeah, we're gonna be targeting 1158 level, and yeah, that'll be it. But that's been enough for today, or at least for this morning. Telegram is link in the description. You can see any trades I take through the week. It's all posted here. It's all available, and go let me know. Me boy CJ at C. Well, I'll let you know rather. CJ at C, and I'll see you guys later. Peace.